What's up YouTube? Today we are going to talk about, do we really need insurance on our housing loan? Hi, I'm Danico. I'm a property investor, business owner and author. If you ever applied for housing loan before, there is high likelihood that you've been promoted with insurance to cover your housing loan. You were told by the banker that you need to take the insurance in order for your loan to be approved. Now, is it true that in order for your loan to be approved, you really need to get the insurance? The short answer is no. There is no requirement from the Bank Negara or the central bank that in order for your loan to be approved, you need to get an insurance. But since the insurance is not required by the Bank Negara, then the question to ask, do we really need the insurance in the first place? Now, first thing is that we have to understand one of the conditions from the bank is to have the insurance in order for them to approve your loan. Of course, not all the banks require to get the insurance. Some of the banks you don't require to get any insurance at all. So it's really up to you. Now, in my personal opinion, I think it's better to get the insurance. Now, here is why. Now, property is the biggest purchase for most of us. Unfortunately, not all of us can actually buy using cash. So that is why we need the bank. When we get financing from the banks, we are indirectly creating debts and liability. So if something happened to the borrower, then the next of kin or maybe the spouse will be liable to pay, and worse still, they will lose the home. So in short, it's not required to get the insurance on your housing loan, but it is highly recommended for you to have one. So what are the typical insurance to protect our housing loan? Now, there are two typical insurance to protect your housing loan. I don't want to bore you guys with the technical terms and details. You can watch the video in the description below. I will just highlight quickly what is the two insurance and then the features of both. Now, the two insurance, the first one is MRTA. Basically, it's a mortgage reducing term assurance. Now, the second one is MLTA, which is mortgage leveling term assurance. There are three main components that we need to look into between the MRTA and MLTA. The first one is cash value. In MRTA, you don't get any cash at all if in the event that you pass away, all right? So the MLTA, there's actually a cash value depending on the tenure, how long you actually claim for it. The second one is transferability. Now for MRTA, you cannot transfer it because it's attached to the property, whereas for MLTA, it's attached to your name. So you can basically, even if you buy the new property, you will still have the insurance with you. The third one is beneficiary. Now, beneficiary for MRTA is the bank, whereas for MLTA is you and the bank. Now, I don't want to bore you guys with all the technical terms, all the details about these two insurance, and I believe a lot of videos available talking about these two insurance. You can find it out there. Now, what I want to do instead is to which insurance shall we get when it comes to property investment. Now, we don't have to complicate things. Now, this is how I think we should be doing when it comes to investing property with insurance. Now, if you're planning for the flipping the property means rather short term, I would suggest for you to take the MRTA, simply because the MRTA is cheaper. It is one-time payment, and best yet, you can actually negotiate with the banker to reduce it from 15 years to 10 years. And if you plan to sell your property or flip it out within 5 years, then you can maybe, if you're able, you can negotiate to 8 years. Now, if you plan to keep your property for long term, like myself, over 15 to 20 years, I would suggest for you to get the MLTA. Now, this is your MLTA. Now, halfway through, you pass on. As your loan balance decreases over time, partial of the payout from the insurance will be paid to clear your loan, and the remaining balance after payout for the loan will be paid to your family members. Now with MLTA, if you're not living in any foreseeable future, then giving time, you will have more insurance cash out for yourself. And of course, if you're going to buy property in the future, you don't need to buy any more insurance. But of course, if your property value, the loan sum is exceeded your sum assured, then you might need to top up. Say for example, if you bought a property for 300,000 and you have sum assured for 500,000, after 15 years, the loan become 150,000, and subsequently you bought another property for 250. That makes a total of 400,000. With 500,000 MLTA is enough to cover both properties. And if you're going to leave the world, then you might still have cash out for your family. Now, in conclusion, if you're planning for short term, say for example, if you intend to flip the property within 5 years or maybe 8 years, then I would suggest for you to buy just one-time MRTA. But if you're planning for long term, I would suggest for you to get the MLTA instead. And it depends on your situation. You might need to just get the higher value for your MLTA, for example, up to 800,000 or maybe to up to 1 million assured. Really depends on your strategy. But in a nutshell, short term MRTA, long term MLTA. So this is my takeaway for you guys. Now I hope you learned something from this video. Do comments below. What is your strategy when it comes to insurance for your investment property? Thank you for watching, and I'll see you in the next video.